Hi there, mates! All aboard! Financial freedom awaits. MyTrade proudly presents the Navigator, the newest, easiest, and brightest fundamental tool from MyTrade's renowned research team. Be guided in your investing voyage. Get the best stock picks, sound long-term strategies, and valuable information about the companies that you're buying. Follow the life. The Navigator. Better your tomorrow.
Hello, good afternoon, everyone. I'm Sheena, and we're back again. All right, good afternoon, everyone. And ayan, balik-balik ang disclaimer, nakakaloka. Good afternoon, everyone, and this is Sheena, and I'm back again with the Wink live. And today, okay, how have you been since our last Wink? The last Wink, if you are not, if you're paying attention, who was the last guest on our Wink live? That's a lunch date. Sino yon? Tell us where are you watching us from? That's FCG or that's Mr. Justin Liu. Today, this afternoon, it's been, jump packed after months after, weeks after election, a few PSER rebounds at ano na ba, 6,822. And we will see a recent Colliers report that the office market occupancy is stabilizing. People are also visiting malls and workers doing a hybrid office setup. Today, we will talk more about real estate with the incoming IPO from another REIT from Villar Group, which is VREIT. So just relax, and I'll have another uh, another face na yan ng mga medyo may mga makikikiligin diyan na mga girls today, this afternoon. If si Justin Liu last week, this afternoon will interview naman if a Villar, one of the one of the sons of former Senator Manny Villar, and that's Paulo Villar and his Virit team. Good afternoon, Paulo. Let me call you on screen. Hi, Paulo.
Hi. Thank you for having me. Thanks again for letting me talk on my trade. So thank you.
Of course, of course. Thank you so much also for giving us the time. How have you been? I know is the election. I mean, did it affect you in your schedule? Plus this, Virit IPO that you're doing. Can you tell us more about? It? Makita man nila yung a little background of your
Uh,
of what you're
it's a
doing.
little delay because I think most people they don't want to invest if they
Mm-hmm.
see that the next administration is like incoming, like in a few weeks. They tend to not invest. So a lot of businessmen they delay their project, like not even from shares or if they have a big project, they'll delay it until after the administration, so they can see what the next administration's policies are and things like that. So you tend to see like a month before, several months before. There's some everybody's kind of waiting, and then you'll see probably a wrap up of investment like once the next administration comes in. So that's normal in every election, every presidential election. It tends to be like that.
Yes, I
And
agree.
of course,
So,
in terms of the stock market, you had the thing with the Ukraine Russia war. So
mhm.
of course, as a small economy, the Philippines is affected a lot by that,
Are
right? So
you
you
personally investing also in the stock market, Paulo?
yes.
All right, that's good. That's good news. People, I think our audience are mostly retail. So knowing that we have a segment called the Touch Base, wherein I interview the owners of the company in a different light naman. Next time, we'll have you there. Promise mo yan sa akin. Ode, di naman. Na-ambush na kita. All right, without further ado, let me give you your.
So
All right.
can I start? Is it okay?
Yes, yes. The floor is
Okay.
now yours.
Yeah,
Okay.
no problem. Yeah, no problem. I think one thing about REITs or real estate investment trusts, which are REITs, is they're really a vehicle meant for smaller investors, often retail investors, to invest in properties. So that's very important. So actually, we'll go through our presentation, and then in the Q&A we can explain what makes a REIT attractive, the basics for everybody. So let me go into the Vista REIT. So if we can go to the next slide, I'll just introduce Vista REIT or VREIT. Or sorry, the next slide. One more. Okay, so so the we have three presenters. I'm the CEO of Vista Land and Vista REIT. Brian he's the Chief Financial Officer of Vista Land, and he's the Director of Vista REIT. And Melissa is the Head of Investor Relations and CFO or Chief Financial Officer of Vista REIT. So we're glad, we'll be all three of us will be making the presentation, and then we'll also be answering the Q&A. Okay, so next slide. One more. Okay, so Vista REIT at a glance. Thank you very much for your time. It's our honor to introduce Vista Land's first foray into the REIT space. And in this slide, we have Vista REIT at a glance. So just to introduce what it is. So Vista REIT or VREIT, we're a real estate investment trust or REIT. And this is the flagship mall and office REIT of Vista Land. We aim to be among the leading diversified commercial REITs in the Philippines in terms of the portfolio, profitability, growth, sustainability, and very importantly, the dividend yield. Dividend yield being very, very important with regards to the REIT. The company VREIT will have an initial portfolio of 10 community malls and 2 PEZA accredited buildings. So you'll have 10 retail malls and 2 office buildings that are PEZA accredited. And it's notable, PEZA is very important because that gives you tax breaks when you're a tenant there and you're an industry like BPO. So these 12 buildings have an aggregate gross leasable area of 256,404 square meters. The portfolio valuation from a third-party valuer stood at 35.95 billion pesos. The occupancy rate is 91%, and we have 5.09 years weighted average lease expiry or WALE, which is basically that's how long the average of the leases extend to, about just over 5 years. In terms of the corporate sponsors, you have Masterpiece Asia Properties Inc., Manuela Corporation, Communities Pampanga Inc., Crown Asia Properties Inc., and Vista Residences Inc. And these are all subsidiaries of Vista Land and Lifescapes Inc. So Vista VREIT or Vista REIT or VREIT, we have a synergy with the Villar Group's retail ecosystem, world-class retail formats, meaning these are our tenants, and these include publicly listed all-home and all-day supermarkets, as well as private concepts such as Coffee Project, All Toys, Vista Cinemas, and Kinder City. These serve as anchor tenants to our malls. And Villar Group-related tenants accounted for 68% of the total gross leasable area, or GLA, and contributed 77% of the rental income in 2021. So 78% of our tenants would be considered anchor tenants, and 80% were considered essential services, which mostly could operate during the pandemic. So that helped create a resiliency in terms of the financial performance. So if you look at our numbers, you'll see that during the pandemic, we were able to grow revenue. So as for our office space in the 2 buildings, 91% occupied by PPO players, 6% by retail tenants, and the remaining by traditional office, which is basically non-BPO. We will be the first REIT that offers majority community malls, which proved to be very resilient during the pandemic as the company, again, posted rental revenue growth in 2020 due to the nature of our tenants and the strategic location of our malls. Okay, so going to the next slide, Vista REIT at a glance. The next several slides will show some of the details of our property. So on this one, we have a portfolio that starts in Cavite. You will see details of our properties here in terms of building footprint, GFA, GLA, and occupancy. So now we have these, you have 4 in Cavite, which are Vista Mall General Trias, Vista Mall Tansa, Vista Mall Imus, and Somo, a Vista Mall. And then you have 2 malls in Las Piñas, which are Vista Mall Las Piñas Main and Star Mall Las Piñas Annex. Next slide, we'll go north. We have in San Jose del Monte, Bulacan, a mall, and then we have Vista Mall Pampanga, we have Vista Mall Antipolo, and in Cebu, we have Vista Mall Talisay Cebu. So you'll see that like Vista Land, this portfolio has a broad range of assets, both geographically, meaning location, as well as the type, right? So you have 10 retail malls and 2 office. Okay. And then finally, you'll have 2 office buildings. So one in Cavite, which is Vista Hub Molino, and one in Taguig, which is Vista Hub BGC. And our 3 primary tenants in these malls, in these buildings, are Google, Teleperformance, and MGS. So if you go to the next slide, I'm going to hand this over to Brian, our CFO of Vista Land, who will talk about the investment considerations when it comes to Vista REIT or VREIT.
All right, good afternoon, everyone. So, why Vista REIT? We have 6 investment highlights, namely, move to the next slide, thank you. First, we have a solid sponsor backing from Vista Land, plus the synergies with the Villar Group's retail ecosystem. Second, we have investments in community-based commercial and PEZA accredited office properties with high quality and stable tenant base. Third, I think most important, solid expansion program with robust, geographically diverse pipeline of profitable assets within the Villar Group for future acquisition. Fourth, we had an experienced, competent, and founder-led management team with a proven track record in managing retail and commercial properties operations. Fifth, opportunities for growth through reversions and rental escalations, active asset management, and enhancement program. And finally, we're poised to take advantage of the post-pandemic economic and retail recovery. We'll walk you through each of these investment considerations, starting with, next slide, please, solid sponsor backing. So Vista Land has an extensive track record in real estate development. It is considered as a leading player in residential and commercial real estate market with a land bank of approximately 3,000 hectares. In terms of commercial developments, Vista Land has over 100 commercial malls and centers developed, 7 buildings with totaling to about 1.6 million square meters of gross floor area, with 80% of our tenants considered essentials. Vista Land has been recipient of various awards, as you can see on the bottom of the slide. In terms of commercial development rollout since 2017, Vista Land significantly added to its over 1 million square meters of gross floor area to end 2021 with 1.6 million square meters of gross floor area, or 60%. Majority of Vista Land's commercial space is for commercial retail malls and centers, which are the immediate needs of our communities. Focusing on the 12 assets of VREIT in terms of rental revenue, it has increased from 1.8 billion in 2019 to 2.2 billion in 2021. But what's to note is that amidst the pandemic and the lockdown, rental revenue for 2020 posted an increase to 1.9 billion from 1.8 billion in 2019. That's around 4%, while other players were actually reporting negative growth during that time. Moving on to the next slide. Our community malls are strategically located within or near Vista Land's master plan communities. 92% of Vista REIT's total GLA is located within or near VLL communities. That's 11 out of the 12 assets of the VREIT. Only Vista Hub BGC is not within the VLL communities. This became relevant, especially during the pandemic, where lockdowns were implemented. Even before the pandemic, having a commercial establishment within the Vista Land developments became a necessity, considering the traffic and now the cost of gasoline. People are opting to shop and have their needed services in the nearby commercial projects. An example of our integrated development is our Vista City, located in Danghari, as shown below. As to our tenant, we have a long leases and that delivers stable cash flow, as shown in the lease expiry profile. On a consolidated basis, our WALE is at 5.09 years. Our malls are relatively new, and we have incorporated the latest trends in developing them. We designed our malls to be more lifestyle and destination malls. Our way of making our malls e-commerce proof. Our mall strategy not only worked, but it turned out to be resilient during the pandemic, since our tenant of choice were geared towards essentials. We are offering an elevated mall experience coming from our high quality and world-class anchor tenants. Next slide. Moving on to our office buildings. Both VREIT's office buildings are PEZA accredited with high quality anchor tenants. In the BPO industry, these are located in prime areas that are easily accessible, that features high speed connectivity, 24-hour security, robust IT infrastructure, uninterrupted power supply with backup generation and monitoring and maintenance system. 91% of our tenants are BPO. We have zero exposure to POGO. 6% pertains to retail tenants and the remaining from traditional office. Google and TelePhilippines are two of our top tenants in terms of space occupied. Currently, the WALE of our office is around 2 years, with 57% of our tenant contracts expiring this year. But to note, this represents only one contract, and as of today, we are in the process of finalizing the terms for the renewal of another 5 years, which will make the WALE back to 5 years. Going to the next slide, most importantly, we have a solid expansion program with robust, geographically diverse pipeline of profitable assets within the Villar Group for future acquisition. Vista REIT is well positioned to pursue the potential infusion of high quality income generating assets from the sponsor's pool of commercial developments. Vista Land has over 100 commercial assets totaling 1.6 million square meters of gross floor area spread across the country. Vista REIT represents only 22% of the total GFA of the group. Thus, there's a lot of potential for future acquisition. Currently, the company is in the process of getting all the necessary consents and approval for the infusion of Vistaland's biggest office building, Worldwide Corporate Center, details of which are shown in the slide, including building's top tenants. Moving on to the next slide, experienced, competent, and founder-led management team with a proven track record of managing retail and commercial property developments. Vista REIT has a strong and experienced board and management team with a combined work experience of 24 years. Moving on to the next slide, opportunities for growth. This slide, you will see that Vista REIT has the capacity to increase or raise its rates and still maintain a competitive pricing based on existing market rates. The current lease rates are set to provide opportunities for growth and take advantage of the improving post-pandemic economy. Last slide for the investment highlights. We're poised to take advantage of the post-pandemic economic and retail recovery. We have seen marked improvement in the foot traffic of malls, and we have seen even levels beyond pre-pandemic or higher than pre-pandemic in some days since we reverted to alert level 1. The potential of each of the malls are shown in the graph is huge, and we are poised to take advantage of the forecasted improvement of the country as shown in the GDP growth rates in the next 2 years. The next, we will now discuss the business strategy. So I'll bring you back, Mr. Paulo Villar.
Thanks, Brian. So just going to the next slide, I'm just going to talk about some of the strategies going forward. So just to repeat, Brian was mentioning, number one, we have a diversified REIT portfolio. We have potential to increase the lease rate. So whatever dividend yield you have now has a better potential to increase. They're in good locations, and there's a lot of potential to inject more assets into the REIT, which helps the valuation, right? So the fundamentals are very strong. But in addition to those fundamentals, we have strategies to improve as well that add the value to VREIT. So number one, we want to achieve organic growth through proactive asset management and enhancement. So again, going back to what Brian said, the lease rates are there's still room to increase them, given that they're not at such a high premium compared to the market. So there's a potential to increase it. The reason for that is these are younger malls. So as they mature, you tend to have higher potential to increase rates. Number two, pursue inorganic growth through new acquisitions and investments. This is when you put additional buildings, malls, or office buildings into the REIT. And right now, VREIT only has 22% of the gross floor area in terms of buildings. So one fifth of the building space is in VREIT. So 80, almost 80% of the space is that's your pipeline for injectable assets. So there's a very robust and large pipeline for future assets to be injected into the REIT. Number three, pursue a proactive leasing and tenant management service and superior services to tenants. Definitely, as these are younger malls, this kind of service will add value. Number four, of course, implement a sound capital and risk management strategy. Number five, in line with future trends, strengthen environmental, social, and governance initiatives. You call those ESG initiatives, while improving operating cost efficiencies. And finally, continue to elevate mall standards through innovative concepts in the retail experience. So this is tying in with the Villar Group's new retail concepts. So in addition to Coffee Project, they've been putting out like Dear Joe and other new concepts that have gained considerable positive traction, in the new, in the pandemic environment. So it's with very encouraging results. So we hope to bring that kind of expertise into the mall to add value to the VREIT. So all in all, these 6 strategies should add considerable value to VREIT. So we are not just simply staying on these very, very strong fundamentals we have now. We do have strategies to add value. So I'll pass it on to Mel in terms of where we're looking to reinvest some of the capital that we're raising.
Yeah, hi. Thank you. Thank you, Sir Paulo. Next slide, please. For our reinvestment plan, the proceeds of the offering will be used by the group to further expand its real estate developments, such as in commercial malls, residential projects, and or in master plan communities within the Philippines. The details of each project, the percentage of completion, the timing of disbursement are discussed in detail in our reinvestment plan. Next slide, please. Next slide, please. Going to our financial highlights, the 12 assets collectively remained resilient amidst the pandemic. As shown in these bar charts, the revenue, operating income, EBITDA, and net income are on an upward trend. The total revenue was 1.6 billion in 2018 and 2 billion in 2019. In 2020, it only declined by 1.5% to 1.98 billion. Although the total revenue was down by 1.5% for 2020 versus 2019, the rental income was actually up 4%. The main reason for the decline in the total revenue is actually due to the parking fees and other incomes that will decline, while the main rental income posted growth. Our malls were resilient even at the height of the pandemic, mainly due to our tenant mix being essential. In 2021, our total revenue bounced back, registering a 16.7% increase, which is primarily attributable to the opening up of the economy. The revenue CAGR from 2018 to 2021 is at 13.68%. The operating income, EBITDA, and net income continued to grow even in 2020, where strict lockdowns were imposed, as we have adopted various cost efficiency measures and the shift to digital marketing. EBITDA has a CAGR of 21.06% from 2018 to 2021, while the net income posted a CAGR of 30.75%. Next slide, please. From 2021 to the forecasted 2023, the Vista REIT is projected to achieve a revenue CAGR of 19.29% and a net income CAGR of 12.62%. The projected revenue for 2023 is at 3.3 billion and the projected net income is at 1.18 billion. Next slide, please. Our REIT portfolio of 12 assets has a total GLA of 256,404 square meters. The total appraised value of these properties is at 35.95 billion, 80% of which is attributable to the mall properties, while the remaining 20% is attributable to the 2 office properties. The right side of the slide shows the net asset value per share calculation. with investment properties valued at 35.95 billion and a minimum liability of 511 million. The net asset value per share is at 4.86 pesos. Next slide. This slide shows the company's 8 months 2022 and full year 2023 forecasts and the IPO valuation. On the left side, you can see that the 8 months 2022 revenue is at 2.2 billion and the full year 2023 is forecasted at 3.3 billion. The fair value change in investment properties of 1.2 billion and 1.68 billion in 2022 and 2023 respectively pertains to the straight line adjustment as required by PAS 17 and is included in the rental income. So we're deducting this to come up with the net distributable income. The revenue projections are based on executed contracts that are effective as of January 1, 2022. For lease contracts with variable lease rates or minimum guaranteed rent, whichever is higher, the company based the projections just on the minimum guaranteed rate. For our expenses, except for the fund management fee, property management fee, and land lease expense, all expenses are estimated based on historical and is just adjusted for inflation. The fund and property management fee is at 1.5% of the billed rental income, while the land lease is at 1% of the billed rental income of each property. The income before tax for 8 months 2022 and full year 2023 is at 722 million and 1.18 billion respectively. Since the company intends to pay out 100% of its income before tax, Vista REIT will be exempt from income tax and there will be no distribution adjustment. Thus, the distributable income will be the same as the income before tax. With this, in an outstanding shares of 7.5 billion shares, the dividend per share will be at 0.10 for 2022 and 0.16 for full year 2023. At an offer price of 1.75 pesos per share, the dividend yield for 8 months 2022 is at 8.25% and for full year 2023 is at 8.99%. The dividend yield increased from the initial filing due to the increase of the 10-year BVAL benchmark rate by about 130 basis points. Next slide, please. These pie charts shows the forecasted revenue and net operating income contribution per property. Somo, a Vista Mall, which is in Bacoor, Cavite, with a GLA of 31,850 square meters, contributes the most revenue and most net operating income at 31.87 and 34.48 respectively. Please note, however, that this revenue and the net operating income includes the past 17 adjustment. But in terms of billed rental income, it is just second to Star Mall San Jose del Monte at contribution of 11% of the total billed rental. Star Mall San Jose del Monte contributes the most at 19% of the total billed rental. Next slide, please. This slide shows the amount of the forecasted revenue and the net operating income per property. As previously mentioned, the top contributor is Somo Avista Mall. Next slide, please. For our dividend history and policy, the company declared its dividends on March 31, 2022 for shareholders of record as of March 1, 2022. Prospectively, the company intends to pay out and declare dividends on a quarterly basis each year, and we will declare at least 90% of the annual distributable net income. Next slide, please. I turn you over to Abacus for the indicative terms of the offer and the timetable.
Um, all right. Melissa, do you have the slide for that? Sorry, I wasn't informed. Okay. Anyway, so just an announcement. There will be an extension of the offer. Let me check. For IPO reservations update, please be informed that ASC Abacus Securities Abacus Securities will accept VREIT IPO reservation up to June 2, 12 noon. So for those who have received the email about it, please be reminded to have your reservation until June 2, 12 noon. Have your funds funded. And all right, for the offer price, it's 1 peso and 75 cents per share. And let me see if let's call in the one on the side of is there someone from ASC? Okay lang yan. We're just trying to check if someone will present this part. Anyway, I'll just be the one to present you the terms and condition. All right, so Vista REIT is formerly the Vista One. This is up to 2.750 secondary billion common shares. Offer consists of 2.5 billion secondary common shares, up to 250 million secondary common shares or option shares. Sponsors and selling shareholders: Masterpiece Asia Properties Incorporated, Manuela Corporation, Vista Residences, Crown Asia Properties and Communities Pampanga Incorporated. Again, the offer price is 1 peso and 75 cent per share. Public float is at 33.33, assuming the overall allotment option is not exercised. 36.67%, assuming full exercise of the over allotment option. Post offer market capitalization, I'm just reading this. Up to 13.13 billion. For lock-up shareholders, at least 10% of the issued and outstanding shares of stock of the company will be subject to lockup of 180 days or 365 days, depending on whether the applicant company meets the track record requirements, exempt from the track record and operating history requirements of the PSE consolidated listing and disclosure rules. Distribution, institutional offer at least 1.7 billion firm shares or 70% of the firm shares. Retail up to 750 million firm shares or 30% of the firm shares. The listing venue is main board of the Philippine Stock Exchange Incorporated. All right. So that was an ambush. I didn't know I was about to read that. Anyway, let's call in the panel for us to start our Q&A. Let's call in Brian, Paulo,
Yeah, thanks so
and
much. You're the iBanker, I thought. And,
yeah, I didn't know I was supposed to read the terms and condition. Anyway, I got
I can
surprised there. All right. Okay, so let's call in our audience. That was a pretty extensive presentation. I actually know the Villar Avenue side because I'm also from the south. So I can see
you know
the
some of the assets, you know some of the
I
buildings.
yeah, and I have to say I really like Crossings Cafe. That's my
Yeah,
favorite. The
that
only
might go into
rooftop.
the REIT at some point. It's
Yeah,
just
what?
super
Sorry.
new. It might go into the REIT at some point, meaning it might be invested.
Oh,
Yeah, it's just super new.
interesting.
Not right now.
All right, we'll
But
watch
it's
out
doing
for it.
so well, the Crossings Cafe.
It
So
is, and the rooftop bar is, I think, the only rooftop bar in that area. Oh, guys, you check it
right.
out.
And outdoors. So in a pandemic
And
world,
it's
rooftops
outdoor.
really
Al
nice. Yeah.
fresco. Al fresco.
It's
Fresh.
really smart that on the left side of the cafe, it's like you will watch the sunset, and that when it's down, yung city lights naman, you can see Rockwell, Makati, and Ortigas at the right side. So
So
naku-curious
nice.
kayo, check
So
out
nice.
Crossings Cafe. Ayan, may
Don't
plugging
forget
pa ako,
Crossing
Paolo, ah.
Cafe. Crossing Cafe in the south. There's also a drive, which is a nice, like a drive-through. Very
The
nice.
Go
Doing
Drive at
very,
the
very well.
opposite side. Yeah. It reminds me so much of Sydney, Australia when I was there. the coffee shops there are just
But
like that.
I just want to say that's a good thing about our retail concepts. We put that in the presentation that a lot of these are inspired from the latest retail concepts from around the world. So it's not a coincidence, although with our own local flavor. But it's not a coincidence that we're taking these modern retail concepts built for e-commerce and bringing them to the Philippines. Crossings Cafe is just one. Drive, beautiful stuff, and going gangbusters in terms of sales and everything. So
It
exciting.
is a date place, Paolo. So whose idea is that?
Chairman.
Okay. I remember him saying, bakit daw hindi ang mga Pilipino, wala silang place na like when you go to to abroad, this nice places, the Filipinos deserves that too. I
Go
remember
to
him in
Crossing
one of the
Cafe,
interviews.
rooftop Crossing Cafe.
That's
Don't miss it.
yeah, that's the place. It's really a good place, very romantic. Yan.
Oh, that
And
too. So if you have a date, it's not a bad place.
yes, that's right. Okay, baka may dinala na si Brian doon kasi ngingiti-ngiti eh.
No,
Let's have
it's
the
really a
question.
good place.
All right, let's see. Kahoy from Kahoy Generoso. Hi, given the net asset value of 4.85 pesos per share, why did the company offer the REIT at a steep discount? Can
Okay.
management
So
give color?
sure, we can explain. So generally, the 4.85 pesos is that we get a third party appraisal company, and then they appraise the buildings. So generally speaking, almost all REITs, they often not always, but they very often trade at a discount to asset value. In fact, property companies in general in the Philippines trade at a discount to their asset value, meaning that if you took a third party appraiser, appraised all the assets, they would get a high value, and they trade at a discount because not all of that value can be realized at once, right? There's a time value of money. So, but in general, there's good values because land is land, right? And it appreciates. So now in our case, in addition to that discount, we wanted to offer a compelling, this is our initial maiden foray into REITs, the Villar Group, right? This is our first REIT. So we wanted something that would perform so that people would be encouraged to do more. Because like I said, there's only 22% of our gross floor area, 22% of our space is in the street. We have 78% still not in the street, not including the buildings we will build in the future. So our interest is in the future, and our future is probably better if we give people a compelling value proposition. So I hope you don't mind. I'm just gonna also talk about
Sure.
how REITs work and everything, if you don't mind, like because we had this.
Yeah.
I've been talking to a number of retail investors, and they're always asking, this REIT thing, what is it exactly? And so REITs, they're actually meant as a vehicle for retail investors or small investors to invest in large ticket capital projects like malls, right? So normally, so what happened, like for example, Henry C, what he did is he built more big malls, right? And over time, and then he would rent it out to tenants, right? And it would generate a cash flow, right? I mean, and then over time, so what happens is over time, the tenants, that cash flow from the malls increases every year, because when you have a hard asset like a mall in a decent location, generally over the years, because of inflation, you can charge more on your rent, right? So over time, as many of the investors know, compounding is one of the greatest powers in the universe, right? It is actually the greatest power in the universe according to Albert Einstein.
Yes.
So if
Agree.
you that's the power of this, right? So it's the ability to compound. So after decades, Henry C became the richest man in the Philippines because he had a large group of malls that over time the cash flow from the malls compounded because the Philippines as an economy grew and we had inflation. So how do you do that? How do you do what Henry C does? You would need like 1 billion pesos or more to build a mall. That's the problem
Mhm.
for a retail investor. So what they came up with is a vehicle called a REIT, where you would put buildings like office buildings or malls in the REIT. And to avail of certain tax advantages, you were required by law. So in order to get these tax advantages, you had to remit 90% or more of the net income. So meaning that virtually all the cash flow almost all the cash flow of the mall has to be dividended out. So you get, in effect, the cash from the mall, right? That's the point of a REIT, right? And that's why when you go out and price a REIT, you talk about the price per share, but more importantly, you talk about the dividend yield per share, right? That's the expected percent. So in our case, if you look at the 2022, you have a dividend rate of 8.25%.
That's
So
high.
like a bond, that's really high. So let me ask you, can you get 8.25% from the bank? Don't think so. Probably you have to invest in like an MLM or some scam or
Yeah.
something, right? But among legitimate investment property vehicles, you really don't get that yield. We offered it because we want to show that this maiden offering of VREIT so compelling, right? 8.2%. Now, another number
That's
that
really hard to beat, Paolo.
very hard. In fact, I challenge anyone.
8%.
Give me a vehicle. You ask your banker, give me something that will yield 8.2. But here, what? It gets better. Because remember, the power of compounding, the power that made Henry C. the richest man in the Philippines. Rest in peace. So what he did was that cash flow increased every year. So you know that what Mel showed you was that next year in 2023, because of rate increases in occupancy and so forth, the cash flow would improve. So you're going to get 8 point, based on predictions. Of course, anything can happen, but based on what the current performance is, it's reasonably construed that you can get 8.99% or 9% next year.
Mm-hmm.
Because you
Interesting.
get the cash flow from the mall. The mall's cash flow goes to you. So if the mall gets more cash, you get more cash. So that's why REITs are often seen as the best of both worlds. They're a bond instrument because that 8.2%, you get that. So every 100 pesos, you get 8.2 pesos. But in addition to that, you get increasing bond yields. So if the mall generates more cash, you'll get a higher dividend yield. So it's like a dividend yield stock, but you're forced to increase dividends. So it's the best of both worlds. So if you can get in at a good rate, which is basically 8.2%, that's very, very good.
That's very, very, very extensive explanation, and I really like how you mentioned it. There's one also interview we had with Kevin Tan, and he said that let's make REIT sexy. Yun naman, yung naman angle naman na yun. So
Let me
from
make
while
it sexy.
yun,
8.2%.
it is, and it's hard to beat, I must say.
You go to your bank, you go to your thing, you rent out your condo, you try to get 8.29%. And here's the thing, backed by a building, which you can visit and see how it's doing, and you get that increase in cash. So the power of compounding works for you. It's a special vehicle, made so that retail investors can get that compounding power from malls and other property vehicles for themselves. So, and then, like I said, a lot of it is graded on the dividend yield because it's dividends in the end, dividends, and our yield is over 8.2%. So can you beat that? So if you can't beat that, then why aren't you investing?
Your dad must be really proud. I can see him in you, how you speak.
It's the truth. I mean,
Yeah, it's good, which is
the
good.
numbers are there.
Na-hype ako parang na-hype ako sa sinasabi ni Paolo.
Well,
Next
I mean,
is,
you yourself, right? I mean, you have some.
yeah, it is. I'm not
income.
kidding. 8% is
Are you
really
getting
high.
8.2% anywhere? You will.
Yeah.
Yeah.
So, another question from Walian. Ako, dumami na yung questions, Paolo, dahil sa in-explain mo. Considering that 68% of portfolio GLA is occupied by related parties, how does this influence management's decision to raise rental rates?
So that's a good question. So that's why we pointed out, okay, yes, they're related parties, but remember, in a lot of the malls here, like for example, there are related party tenants. In some ways, that's a good thing because that you're counting on that too, because they won't default on the lease. That's a legal agreement, right? Once the REIT is public, it's a legal agreement. So if you have to ask yourself, yes, you're getting a dividend, but will the tenants pay? That's ultimately the question you want to ask. Guess what? The primary tenants of a lot of our malls are All Home and All Day, which guess what? Are publicly listed companies. That means there's a lot of scrutiny over the contracts between them. It's not between a private company. So you will see real time because All Day and All Home issue public financial statements. What's the condition? Will they be able to pay? Yes, because public companies, they can raise equity, they can borrow debt. It's easier for them to do that because they're very transparent. You'll be able to see all day and all homes performance. So you'll be able to see for yourselves if they can pay. And if you look at them right now, they definitely can pay, right? So that's the core essence of it. Remember, it's a dividend. So what you want to make sure is, can those tenants pay the lease? Will I get the 8.2%? Well, when a lot of the tenant space is a public listed company, the answer is yes. And you can make sure by yourself. You just check the financial statements of All Day and All Home. So my answer to that is, it's actually good when the anchor tenant is a public listed company or a credible company, because in the end, we're governed by third-party leases, right? And
Yeah.
what you want to know is, are they going to pay you the lease? Answer, probably, more likely, if it's a public company, the answer is yes. Because their stock price tanks. Obviously, if they don't have a lease, that would affect their credibility so much, or they're not paying or stuff like that. It's a lot harder for someone not to pay a lease if they're a public company than if they were a private company. So if they were a small private company, you would wonder, oh, are they going to pay the rent? I mean, how do I know they're going to survive?
And how
But this-
about the increase? Because are you not going to be hesitant to increase them? It's because I mean,
Okay,
it's
so
in
that's
the
the
same
beautiful thing is, these tenant leases also incorporate a rent based on sales. So as the sales increases, the rent increases too. Meaning, like, we don't get to choose. It
So
increases.
it's based on the percentage. That's really
That's
nice.
right. And in fact, if you look at the publicly listed financial statements, the percentages that we're giving are even higher than some other companies. So they're quite significant. So
Ayan,
you
guys,
are
narinig niyo ba yun? So it's gonna be dependent on the sales of that particular store, not a
yes.
fixed rate of rental fees. So
Because if
that when it
you
increase.
and if you would know that, because if you had like a restaurant or had a kiosk, well, not kiosk, but like for restaurants, for example, or you in sometimes in a lot, in, like, for example, if you were renting in SM Mall, for example, and you're a tenant, this is what make Henry C so rich, is that you would pay a variable rate. There's a minimum guaranteed rate, and then there's a variable rate based on your sales. So as your sales grow, SM makes more money, right? I'm just pointing out the example of
So how
SM.
about the
Everyone,
fixed component of the rental?
that's just a floor, meaning you get that as a
Mm-hmm.
minimum guarantee. But if it goes
Okay.
over, if that variable rate goes over, then you get that variable rate.
Whichever is higher. And we
Whichever
also
is
do
higher.
escalation on the minimum guaranteed rent.
Okay.
Yes. So that's
All
how
right.
you get guaranteed that you will avail of that upside, is because of that variable rate.
All right. So, moving on, para makarami tayo, Paolo. From Rain, I understand 80% of VREIT's GLA is occupied by essential tenants, and that these tenants generally outperform discretionary stores during the pandemic. What is the outlook post-pandemic?
Well, it's pretty good. In fact, you can actually go to the public, calls, investor relations of both All Day and All Home, who are both looking at growth. So we're very optimistic about the post-pandemic. We believe that with a stable government and a recovery from pandemic, you'll see malls do better. That's bottom line,
Yeah.
right? So I think essential services, it may not be a strong rebound just because we're coming from a higher base. Like, tend to be, what he means is the discretionary stores, they'll rebound from a very low base. So percentage growth wise, it will be
Yeah.
greater in discretionary stores just because they're coming from really lousy to good. But we're also good going to excellent, right? So less of a higher growth, but growth is still there. So that's what you can expect.
Okay. From John Joseph, what would be VREIT's target mix of GLA allocation between malls and offices moving forward?
Okay. So in general, our portfolio in Vista Land has historically over the last 5 years been about 85-15 or 80-20, where the 85% is retail malls and 15 to 20% is office. So in the long run, that will tend to be the ratio. However, it's not like, it's not exact, right? We have for example, we have a big mall that we talked about called WCC, Worldwide Corporate Center, that in effect is a huge mall. So if I were to put that in, the ratio of office would go up temporarily.
Mhm.
But over the
Mhm.
next medium term, over the next 5 years or so, it would probably tend to resemble what our overall portfolio ratio is, which is, again, about 85% retail malls and then 15 to 20% office.
All right. So if you just tune in, we are talking about the VREIT, the latest very Villar REIT that will be it's offered at
I can answer this question.
1.75 per share.
Yeah, so the expiring lease contract, I'm sorry, does everyone see this question? Any
All right. The
updates?
question next is from Prankul Pran. Any updates on the expiring lease contract this year, equivalent to 57% of the GLA?
Yeah, so the good news about that is that, and that's the only reason Whale is lower, is that expiring contract belongs to Google. So, they're doing pretty well last time I checked. I mean, stock price went down, but they're a pretty big company. So I don't think they'll have a problem renewing because they have, generally speaking, you have a renewal because there's so much investment in the office, which, by the way, is beautiful. It's so beautiful, that office. There's a lot of money that went into that office, I can tell you. So
Oh, okay.
we have a lot of
Are they
confidence.
going to be on hybrid also for the office setup?
I'm not sure. I'm not sure, but like they actually, for them it's a growth setup because I don't think that's just BPO. It's actually marketing. They have a very good business
Okay.
in the Philippines. Probably because Filipinos are the most, we're the most social media intensive.
Of
We use
course.
a lot of
Eight
Google, right?
hours a day on
Yeah,
average per
Philippines is a
person.
huge growth market. So that's not just BPO for them. That's operational, meaning that they have marketing here because they have such a good business in the Philippines. And they
Yeah.
add buildings. They don't add floors. They add buildings. They're a
Building.
very big
Yeah.
company. So that, fortunately for us, that's I mean that's I don't obviously I can't say statements here in a public forum that it's
Yeah, of course, of
automatic,
course.
but obviously I can tell you since it's Google, they
Mhm.
have the money, right?
And by
So
getting Google, I mean Filipinos aspire to be there as an employee. Basically, they have a really good office.
yeah, let's just
So
say that
getting
they're
Google
doing
is
pretty
an
well.
a
So
plus for
yeah,
you. It's an
they're
eight.
on they're on a growth trajectory.
Yeah,
Yeah.
yeah, and just to clarify, China, the 57% expiring pertains only to the two office buildings because the 10 malls, only 11% are expiring. So I'm
Yes, that's another thing. So it's
so
just that's only referring to the two office buildings, which
All
aren't the
right.
majority of the space. But even for those office buildings, Google, just remember.
Yeah, of course, it's Google. All right, from Crack Crew 03, from the current 91%, what is VRIT's target occupancy rate this year?
right now, as of March, we're actually at 97%. So I think that we're maintaining that. There will be usual like in and out, but 97 is a good number, I would say.
Mm-hmm. Yeah. Okay. Next, from Yang Amonte. Hello, all. Coming in late. Okay, you can rewind this later on. With the rising interest rates, are REITs still as attractive? And do you think they have more pressure to deliver higher yields? As mentioned a while ago, Paula said that it's 8% and it's going to continually grow.
Yeah,
So,
that's a good point. They're very yield driven instruments, but you have to realize that affects all stocks. Even if you're not a dividend stock, the way stocks are valued, higher rates tends to lower the prices of stocks because it's a comparison, right? The cash flows of a stock are discounted. If you know discounted cash flow method, they're discounted at a certain discount rate, and that's based on whatever the benchmark rate is. So the benchmark rate goes up, it affects stocks in general in a negative way. So what you want to do is you want to go to the highest yield, decent quality high yield stocks. Obviously, the higher yield ones will be less affected by rising rates. And there's no higher yield REIT than VREIT. So, like, I'll just give you an example. Some of the other REITs, they're like 5.5, 6%. They will be severely affected, probably, or they might be more affected just because they're starting from a lower base, right? But when you have 8.2%, even if rates go up, you still have that buffer above the benchmark rates, right? So to insulate yourself from that, you'd want to go to a higher interest rate vehicle. So among
yeah.
REITs in general, we're poised to do that. Now, if we get into an inflationary environment too, just think about it. better than bonds. So in a bonds, you're going to get 8.2%, but that will never increase, right? You're stuck at 8.2, at least with the malls. In an environment where there's inflation, which is why we're raising rates in the first place. Hard assets, buildings, stuff made of gravel, concrete, steel, they tend to appreciate in value, as you know. That's why, land appreciates in general over time, because it's a hard asset, right? And inflation goes up, land tends to go up as well. Or buildings, right? Construction material prices have increased. So if you build a building now, it's literally like 8% more expensive than it was. Depending on the composition of materials, it's anywhere from 6 to 9% more expensive than it was last year. So just on replacement value alone, your building's worth more, right? And over time, if the building's worth more, you'll charge more rates. So again, higher rate tends to insulate you, and building REITs better insulate you against rising rates than a bond. Okay.
All right. So another question from Ponty Z. What do you think are the risks in VREIT?
So the risks in VREIT are the risks of, you're taking the risk of any enterprise like a mall. Like if something happens to the mall. Fortunately, malls are pretty durable structures. I mean, some malls that are there for like 20, 30 years. That's a lot better than some companies, right? So it's a pretty durable vehicle. And unlike bonds, you can be compensated somewhat for inflation, right? And you can get some of that compounding effect. So there are risks, but less risk than a lot of other vehicles, which makes them very, very compelling.
I'm really interested of interviewing you on Touch Bases, the one-on-one interview. Can we set that up? Brian, can you set that up with Paolo?
You should have
Because
Brian. Because he's
We'll
still
see.
single, so.
No, I want the schedule of Paolo now. No, just kidding. All right. So there is a sentiment, Paolo, and I hope you're okay to answer this. What is like the people who invested in some of the Villiers stocks have this sentiment? So what is the difference of VREIT not having that kind of, probably
Okay.
shaky price?
So
How can
that's
you?
a good question. So I don't want to, I could go in hours.
Yeah, based on,
Why
I mean, on the
certain
VREIT
stocks have performed
alone.
very
Yeah,
well. But
VREIT
talk
alone.
about VREIT, and let's get to the bottom line, right? VREITs are generally based price on yield, right? It's a dividend that you get. So in our case, it's 8.2%. So a lot of the people who buy REITs, they buy them as like an alternative to bonds, right? So a lot of the market is people who want to get that dividend yield at 8.2%. They don't really care about the price that much. They like the 8.2% because frankly, where do you get 8.2% anywhere else? Go to your bank and see if they'll give you 8.2% on a fixed income instrument, right? Yeah. If you can do better than that in some kind of scam or MLM or whatever, but in general, if you go to the bank and ask for a credible fixed income vehicle, you're not going to get this kind of rate, right? So that's the bottom line. Like the pricing, will it go down? If you actually look at most of the REITs that came out, they have appreciated since their IPO. And the
Yes.
reason is that a lot of the people who buy the REIT, they buy it for the income. So they don't care about the price. They don't sell it. Because they're like, you know what, as long as I get 8%, I don't care. Because that's what I bought it for. I bought it for the dividend yield. So that's the nice thing about REITs. They're not like they're based on that sheer power of cash flow, compounding cash flow from a hard asset. That's what gets you the value of a REIT. So a lot of the people, they don't care. Okay, the price temporarily goes down, but hey, I'm getting my 8.2%, or I'm going to get my 8.9% next year. That's what they care about. So what tends to happen is the people who bought the REIT, they tend to stay there, and then in a small way, so there's no selling pressure because most of the people who buy a REIT, they buy it for yield, right? And then additionally, more people seeing, wait a minute, 8.2? The bank's giving me 2%. So they're going to go to 8.2, just small way, but it adds up over time because there's very little selling pressure. And that's what tends to be, that's the great structure of a REIT in the Philippines.
That's
Because of
right.
the desire for yield investing vehicles, especially when you see inflation, you're going to see, that's what's happening. Like in the United States, as rates are going up, people are fleeing .coms, which don't generate cash, and they're going to old value style companies that are generating cash, that are generating dividend yields, right? So in our case, you have that compelling yield, and that's why this stock should perform, because we've given such a great yield. 8.2%. The other REITs out there are like 5.7, 6%, 6.5%. So we have created a significant buffer, so that
That
uh,
alone will be the edge.
yeah, that alone, because that's bottom line. A lot of the people here, you know what? Forget the price. Where are you going to get 8.2% on increasing dividend yield? That's kind of nice, right? So that's
Yeah.
that's why this is so compelling. Forget the forecast, forget the thing. I'm getting 8.2% a year. Bottom line, that's what preserves the price of this REIT. That's what the good thing about REIT. Sometimes it's kind of like, and one other thing, cash is cash, right? For every 100 pesos, you're gonna get 8.2 pesos. Do you care if that 8.2 pesos, what brand it is, what company it is? No, you don't, because in the end, you get 8.2 pesos. Now, if the other
Yeah,
REIT
be
gives you 7
agnostic about it.
pesos,
Yeah.
does it make a difference? No. You get 8.2 and you got 7 pesos. Does that money change color? Does that money? No, no, no. It's just, so that's the bottom. That's why REITs are valued at
I
some point
really
average.
I really want to see your schedule. I have a lot of questions in line with the way you're answering me. It's for touch base, not for wink. So I'm really, I'm really holding my tongue not to ask you questions about the touch base side. Anyway, so I will ask you another question, Paolo. But before we move on, I want to ask Melissa and Brian, what are you excited about in this coming VRE?
Well, of course, this is our maiden REIT vehicle that we're going out there. So we want to be part of the REIT bandwagon. And the good thing about, what Mr. Paul is saying, that, we're offering a good yield to investors already at the get-go, right? And then you have a lot of pipeline that we can put in there. And, all other businesses moving forward, hopefully.
And
Okay, let's mute the other. Okay,
aside from launching it, actually what excites me is to grow this REIT. As mentioned by Brian, we have a lot of pipeline. This is just 22% of the portfolio of the entire Vista Land group. So I'm excited about growing this REIT.
all right. So the last question, Paolo. What is the signature of VREIT compared to all other REITs that exist in the market today? What's your main?
8.25, baby. I'm just what?
All right.
It's higher than
I
no, no, no,
think
no.
that's
I
just
do
a
have no, no,
one-liner thing.
no,
And
no, no.
of any
I,
final words to our viewers?
I have more. I have more. In fairness, like I just want to put that out there. Hey, 8.25. Just remember that. Okay. Bottom line, it's cash, pesos in your hand. Every year you're gonna get, and that's growing. Remember, because you are buying the compounding power that made Henry C. the richest man in the Philippines. But let me distinguish VREIT from other REITs. In addition to the incredibly, I mean, we priced it so well, so that's why I'm just like, okay, whatever. I don't care. Compare me against any other REIT right now. Compare me against the yields of every other REIT. We beat them all. Okay, that's one. Number one. Remember that. That's 1, 2, and 3. Okay, because that's money in your hand. Now, other things. We're also good diversification because all the other REITs, they're office. So as you know, as a good finance person, you've got to diversify. You can't put all your eggs in one basket. So you can't, if you want to go REIT, we're the one that's majority mall REIT. So you get the upside of a REIT. You don't want to just be all office because you're just exposed to office. Now, office did well during pandemic, but there are problems with the office that it will confront in the future, like artificial intelligence and so thing. You don't want to concentrate all your assets in just office. You want to have some of that mall, right? So that's what we are. Among all the REITs, we're the one that's majority mall, retail mall. So that gives you diversification too. And number 3, our malls are built for e-commerce, right? Because they're lifestyle malls, they're malls located closer to the communities, right? There's less traffic to go to our malls, and they're more lifestyle oriented. They're younger. They're literally younger, meaning they were built recently, right? So you get all those things in a retail mall that's e-commerce resistant with e-commerce resistant retail formats. Remember, supermarkets, Home Depot, and home furnishings are the ones globally, internationally, that are still doing well in e-commerce. So we built them for e-commerce. So you have all those 3 things. You have an incredibly compelling value proposition, value rate, 8.25%. Beat that. I challenge you to beat that. You can. It's a tough luck. The number two, you have a diversification, which you need as a finance person. You can't put all your eggs in one basket. That's what you learn from, a lot of the, portfolio management and so forth. It's just prudent. It's just prudent. So don't put it all. It's all office REITs out there. So you want to put like one retail mall VREIT. Number three, our retail malls. You not only get exposure to retail malls, you get exposure to retail malls that are built for e-commerce, built for the future, right? With lifestyle and retail formats built for the future, right? And then we'll be putting stuff like like I told you, the Crossings Cafe with a rooftop that's open, right?
Favorite
So
rooftop bar. The
yeah,
only
so we're very conscious of the future. We're building for the future. You get that at an incredible price. So that's VREIT in a second.
All right. I guess the viewers, what's weird is that sometimes when we stream, it's usually high and then it goes down. But today, I think they really love what they're hearing because it's increasing as we extend the time. But I know that there's another interview that you're going to have, and I don't want to extend you
I can
furthermore.
go
But
if you
you
want.
can
We
go
could
or
have
you
gone
can have another interview with me.
we could have gone super technical, but I know that I've had this experience with retail. Like there was a call from another one we were doing with BDO, and there was a mom, Rina is her name, and she had this thing. It's like, I don't know much about this jargon in real estate, and I want to know why should I invest in the REIT, and that's why. And I said, okay, you know what? Let me explain, because it's good. That's what it was built for. That's what this was made for, right? Investors, hey, the complications. Do I need to do a discounted cash? You know what? I'm going to give you 8.2%, and it's going to appreciate because I'm giving you all the cash flows of the mall. So if you believe that the mall will appreciate, it'll get richer, or it values more. That dividend yield will at least continue. You'll at least get 8.2, and it might increase, and probably will increase, right? So that's the bottom line.
Okay. But can you promise me right now, live, that live, that you're gonna have a one-on-one interview with me about Touch Base? If you don't know about Touch Base, it's interviewing the face behind the brand. Half of it talks about your decision makings in the company, and how another half is actually about you. So I just want to
I'm very boring. I can assure you.
no, I can make
I
things not boring.
let's talk about it
even
after.
the
Talk
even
about
the
it.
most introverted person I know, I can make them entertaining.
Let's talk about it
But
after.
you're just, we're now down to 160 viewers. A while ago it's just 100, and it's usually goes down, but it's going up. Anyway, thank you so much for this
No problem.
afternoon that
Thank
you've
you so
given
much.
us.
It's an honor to present VREIT.
Thank you,
Thank
guys.
you.
Thank you, and we'll have you again next time, Paolo. All right, and that's it for Wink. And I hope that you've seen. If I hope you're relaxed this afternoon, having your merienda, talking about the REIT. They're talking about the dividend. This is more of a dividend stock. They're gonna buy it because of dividends. And thank you so much for giving your questions. And again, just to inform, we will accept reservation up until June 2, 12 noon, to give time to those who are still thinking about it now that the Villiard Group has presented their prospectus. And this is going to be available also after the event. So if you are late, just, rewind this. You can also please subscribe to our channel, My Trade PH, if you want to see the latest live, and hit the notification bell. All right. Thank you for joining us. And I hope that you will always be get informed and what investors needs to know. Bye.